Yeah, we wanted to basically allow people to invest small amounts in multiple properties and help build their real estate portfolio.
So does it really work? I mean, the mindset in India is कि यार खुद का घर होना चाहिए and घर होना चाहिए तो पूरा घर होना चाहिए. Why the case for fractional real estate and residential?
We are not saying that don't buy a house for yourself. People are doing that. People are saving money for their own house. But now the retail investor wants a piece of this really rich asset class, which is not accessible to them. So they are like, ठीक है, मतलब पूरा डाउन पेमेंट नहीं डालना है, 5 लाख है, 3 लाख है, वो डाल के let's see, like invest in like a good property or a good location that you always hear about.
On your current platform, you have a Hiranandani property. I think Chennai, based on nearby Chennai, right? What benefit these brands really have in working with platform like yours?
I feel that for even like big developers and like tier one developers, fractional real estate ownership kind of becomes just a different innovative channel.
For the whatever properties you are bringing onto the platform, and if for some reason Claravest shuts down, what happens to those properties? What happens to the stake of retail investors?
So the way we have structured this, right? Claravest is going to be.
Hey everyone, welcome to another episode of the Alt Investor Podcast. Via this podcast, we aim to decode some high yield opportunities in various alternative investment options available for you guys. Today on the podcast, we have Karan and Mananki. Uh, Karan and Mananki come with a decade of experience in Silicon Valley, where they worked in various companies such as KPMG, Robinhood, SAP, where they held key positions in compliance, product management, fundraising, and many others. They were investing in multiple asset classes while working in the valley, but realized that real estate was very hard to enter because of the high upfront capital requirements, especially in India, where owning real estate is considered a dream which does not get fulfilled for many, many people. Determined to solve this problem, they quit their high paying jobs and moved back to India to start Claravest. So, welcome, Karan and Mananki. For
Thanks,
our
Yash.
viewers during this podcast, uh, we'll try and find out what Claravest is, why they have gone into residential real estate as an asset class, how their model works, what kind of due diligence do they do, and whether these opportunities are right for your personal portfolio or not. So, welcome, Karan and Mananki. How are you doing today?
Fantastic.
We're
We're
doing
excited
well.
about this.
Thanks for having us, Yash.
Yeah,
Yeah.
great. So, Karan and Mananki, welcome. Quite an impressive background. Moving back to India is quite a leap that many less people are willing to take. Question is, why did you guys move back to India, and why, even if you move back, I'm pretty sure you'll have multiple offers to get into high-paying jobs. Why go down the startup route?
Yeah. First of all, thanks a lot, Yash, again for having us. We truly appreciate and really like what you're doing. We like the Alt Investor Group also. Love how people have been very accepting about the whole smart investment and innovative way of investing. So great initiative. Kudos to you. Yeah. So
Thank you.
a little bit background about Karan and myself. How we started this, why we started this. We both worked in Silicon Valley for about 10 years. I primarily worked in finance, compliance, worked in KPMG for about 6, 7 ish years, then moved to Robinhood, saw through the Robinhood IPO. And during this whole time, we were very, very, passionate about passive income and how we can invest so we can retire early.
Yeah.
um, I also come from a real estate family background, so just like understanding real estate, construction, the importance of investing in real estate has always been just like the school of thought I grew up with. Um, and when we faced this problem, I think we really felt passionate about it. We kind of sat on it for like a year or two, but then we really felt passionate about it. We really wanted to solve this problem for us, for our peers, for our friends and family. And, that's when we decided to actually move back 2 years ago and start Claravest.
Oh, wow. So did you, I
Yeah.
mean, Karan, yeah, please go on, add on.
Yeah, again, thanks for having us, Yash. So I primarily, like you mentioned, I come from a product management background, started my journey at SAP, then moved on into consulting work to build multiple different web applications and mobile apps. Always been a very early investor, would dabble around with stocks, mutual
Mm,
funds, gold, and even crypto for that matter, being in the valley. But real estate was extremely hard to enter. And,
mm,
it was not just us, but also our friends, close friends around us kept, echoed the same problem. So we said we have to do something about it. This is a true problem. So we quit our jobs and just dedicated ourselves, to solving this problem.
okay. I mean, quite a risky move, in my opinion. Something similar to what you guys did. I also moved back to India to focus on alt investor. Very difficult to convince family कि क्या पागल आदमी है ऐसे छोड़ के आ रहा है इधर क्या कर रहा है but I understand the motivation when you have an idea just try and do everything to make it work so I am assuming that's the case here as well so
Yeah,
uh,
Yeah, that's the start of life.
yeah no
yeah.
fantastic so let's talk about what is Claravest why fractional real estate also makes sense for retail investors from your perspective.
Yeah, so at Claravest currently, what we're trying to do is we are allowing retail investors and people to invest in real estate with a very, very small amount. Currently, we are focused on residential space, um, and our minimum investment ticket size ranges anywhere starting from like 1 lakh to 5 lakh, depends on where the property is. Um, so, like a fun fact that we recently, heard that the Knight Frank Wealth Report of 2024 came out, and it mentioned that the
Mm-hmm.
India's top ultra HNIs invest 32% of their portfolio within residential real estate, and that kind of
Oh
also,
wow.
helped reiterate that real estate as an asset class is so historically been restricted to HNIs and UHNIs. And that's because what exactly Karan mentioned, that you need upfront capital or you need to take a huge loan, and then also all your money is stuck in one asset.
Mm-hmm.
So we really wanted to break this barrier with Claravest.
Hmm.
Yeah, we wanted to basically allow people to invest small amounts in multiple properties and help build their real estate portfolio, thus making
Hmm.
it not only accessible but also affordable to actually build a portfolio of real estate properties, which previously was not possible if you didn't have money.
Hmm. But does it really work? I mean, the mindset in India is कि यार खुद का घर होना चाहिए and घर होना चाहिए तो पूरा घर होना चाहिए. Why the case for fractional real estate in residential?
Yeah, I mean, I think that's a great question, right? But we are also realizing, so now we've launched like a little bit over a year ago, and we have had two properties that are fully
Hmm.
funded. So we're also talking to a lot of people, understanding their perspective, both Indian residents and NRIs. And we feel that people's perspective is changing. Um, we are not saying that don't
Okay.
buy a house for yourself. People are doing that. People are saving money for their own house. But now the retail investor wants a piece of this really rich asset class, which is not accessible to them. सो दे आर लाइक ठीक है, मतलब
Hmm.
पूरा डाउन पेमेंट नहीं डालना है, 5 लाख है, 3 लाख है, वो डाल के
Hmm.
लेट्स सी, लाइक इन्वेस्ट इन लाइक अ गुड प्रॉपर्टी और अ गुड लोकेशन दैट यू ऑलवेज हियर अबाउट. because that's the problem, right? You always hear about like,
mm,
oh, this property, like, ye location bahut boom hoga, ye, this a tech park is coming there, this will really help this location. But then there's no
mm.
access. Like, how can you act upon it? And I think that's what we were trying to do.
Okay, got it. Um, Residential real estate. I mean, like Claravest, I speak to a lot of other founders in this space as well, and pretty much each and every one of your competitors is actually doing commercial real estate, be that hospitals, warehouses, or commercial office spaces. The primary reason for them doing commercial properties are the rental yields. And in India, it's a fact that rental yields for residential is a bit on the lower side when you compare it with commercial real estate, right?
Yeah.
Uh, why does it still make sense for a normal retail investor to buy a residential real estate as compared to commercial real estate? Purely from a return point of view, what am I missing?
Yeah. So, since it's been like few years, like maybe like 6, 7 years, that I think in India, the whole narrative of why to invest in real estate has kind of been changing. A lot of focus has been given to rental yield, year over year rental kitna milega.
Hmm.
And the whole aspect of why historically people have been investing in real estate, which is property appreciation, that aspect is kind of losing the
Mm-hmm.
touch. Maybe it's because of the
Mm.
social media, maybe it's because what is kind of going on in fractional real estate ownership, industry also. So we kind of want to, bring that narrative, tell people that narrative. The other thing is, 80 about 80% of the total real estate is still residential. So you're also ignoring like a huge chunk of your real estate AUM by not fractionalizing that and not even having access to it. What we feel
Mm.
is that, if in a residential real estate, if you're running a building or running bunch of apartments as a service apartment or a co-living area or even like vacation rental homes, the rental yield are kind of
Mm-hmm.
not maybe as equivalent to the commercial space, but at par at commercial space. But the aspect of property appreciation is quite
Mm.
higher. Um, the other small difference between, like, Karan and I've been always talk about, uh, when we speak about commercial versus residential, is for commercial, if I have an asset of 100 crores, after 7 years with
Mm-hmm.
just 8% year over year appreciation also, I'll have to make sure that that asset is being sold at 160, 170 crores. Whereas in residential, a
Sure.
2 crore ka flat, even after 10% appreciation in 5 years, I'm still selling it at 3 crore. And there are a lot more buyers. Like,
Mm.
the easiness could be
Mm.
more. I'm saying could be because, I can't predict future. But there is like a lot more buyers who want to buy a house at 3 crore than an MNC who can, like, buy the asset at 160, 170 crores.
Mm. Okay.
Yeah, and our focus has always been not on metro cities, right? If
Mm-hmm.
we start focusing on the tier one nodes or tier two cities, right, or regional boutique developers with a
Mm.
strong track record, or tier one developers who focus on the quality of the construction, there you will
Mm.
see that your appreciation is still good. If so,
Mm.
yeah, because good construction quality, how the building is holding up, plays a very crucial role even down the line during resale. So we look at those factors as well, and we feel residential still has a lot of potential for it to grow and invest.
Mm. Uh, Karan, can you give an example to support that? So, we're talking about capital appreciation, ease of selling,
Hmm.
as
Hmm.
compared to commercial property. So let's try and make the audience understand with an example of your recent property or your current property that you have on the platform.
Yeah, sure. So we can take an example of Navi Mumbai, right?
Okay.
So if you look at Navi Mumbai right now and where it was maybe 10 years back, the property prices over there were hardly, maybe I think around 1000 to 2000 rupees a square feet or so. Today, it is being sold for anywhere upwards of 8,500 rupees per square feet, depending on the property.
Wow.
So there is a lot of appreciation that takes place. But one thing you need to keep in mind is that these are places that were not metro cities. These are
Hmm.
places that are growing right now, right?
Hmm.
Because of multiple other things that took place in that area. A key thing is, obviously the Atal Setu bridge that
Hmm.
improves the connectivity. The other is the Navi Mumbai International Airport that is coming up. When you start looking at like government initiated infrastructure development, then you start to realize that, tier one nodes start giving you those appreciation. Another classic example is Powai. If you ever looked at what Powai was selling when it started and what their
Hmm.
Powai is today, I believe the first apartment in 1999 was being sold at around 900 rupees a square feet.
Hmm.
Today it is around 35,000 rupees a square feet. That is
Wow.
almost like a 2000% increase, right? So if you look at it, I mean, I think it kind of does give you that appreciation in residential as well.
Okay. Got it. So we have already talked about, a couple of things. You look for upcoming tier two areas. You look for, the ease of selling as well. Uh, how does your model, let's say, if you want to bring a property onto the platform, how does that model work? What kind of due diligence do you do? What are the other things that you really look at before bringing a residential property onto the platform?
Yeah. So the number one thing which we were talking about is location, right? In real
Okay.
estate, everything revolves around location. Identifying those micro markets are key. So what we do is before we even start off with anything, we first start reading multiple reports, gather a lot of data and market intelligence to identify which is going to be the next area that is going to grow. We identify that micro market. Some of the factors which we touched upon was, infrastructure development, government initiatives, the job employment that is taking place, the population migration that is happening around those areas. So location is the first factor that we take into consideration. Once we've identified that, then we move on to identifying the developer in that particular area. Is there a tier one developer, or are there even regional boutique developers? We look
Hmm.
at, how their buildings have been in the past 10 years. Are they still holding up? What is the type of construction quality that they have been providing? We speak to their existing customers as well to find out if there has been issues that you don't probably see upfront. So we do a lot of, analysis around that. The third, once we have done all of this, the third one that we end up doing is we like the location, we like the developer, we look at their existing projects and start our due diligence process over here. So we
Okay.
look at the title clearance, we work with our legal team to go through all the RERA documents, to look at all the certifications that have been taking place. We look at even the developer's historical track record. Has there been any sort of delays in possession? If so, why have those come into play? COVID being an outlier, but there could be other instances as well that could cause these delays. So we try to mitigate the risk and only work with, people who have a very strong track record of delivery. The fourth one we look at then is the configuration of the property,
Hmm.
which plays a very crucial role. So we start thinking about which configuration is going to be most in demand or is in demand. Which type of configuration is going to give you better rental yields? Is it going to be a 1 BHK or is it going to be a 3 BHK? For example, in Bangalore, 1 BHKs are giving you extremely good rental yields today because people kind of want their own privacy. They're working in
Space.
these
Yeah.
tech jobs. Yeah. And if you go further down, like maybe in a Chennai, they prefer larger units. They are also cheaper,
Hmm.
so they want, bigger units. So there, holding a 2.5 or 3 BHK makes more sense. So we end up looking at those factors. Another thing which we also look at, in India, people believe a lot in Vastu. So we
Hmm.
start looking at the Vastu configuration of those apartments as well, because these things play a very critical role when you're going to resell the property. Today, you might not think about it as an investment, but tomorrow, when you're going to sell, that might be a key factor for it. So you look at that.
Sure.
The fifth one then we get into is the financial modeling. We look at, what type of returns can we expect from that property. We create an SPV in the form of either an LLP or a private limited for every asset. So investors then become part of that SPV, and then we help
Hmm.
manage the entire asset, in the entire life cycle of the asset and provide the returns to them. For example, one of the things that we do in our workflow is it's very similar. We first onboard the customers, do their KYC, and then we have them sign an expression of interest.
Yeah.
One thing that we are not currently doing, for example, if you, me, and Mana decide, right? One thing that we don't do is we don't take people's money upfront until we fund the
Okay.
paper, until we fund the property on paper. Only then do we call upon the capital contribution. So
So you
currently,
take
as
the
a company,
property
we are
on
not
your
doing
books
upfront.
first.
No, we actually tie up with the developer and we help
Acha, okay.
them sell because it becomes, Yash, it becomes like a very innovative channel for them to also sell. So, they are happy to work with us. They will be like, okay, I have this inventory, why don't you go ahead and try this out?
Offload it, yeah.
So we have, yeah, we partner up with them. So we don't really purchase the property and we tell them, okay, give us some time. We're gonna, do this. And from an investor standpoint, we don't want to sort of take their money up front and, then they start thinking about what are they doing with our capital. So we end up taking the money only once we fund the property on paper. Then we call for the capital contribution and then go ahead and purchase the entire asset on the SPV, and manage the entire full life cycle of the asset. In terms of the exit, we have a lock-in period post
Hmm.
which they can sell their share to either
Hmm.
someone within their network or they can reach out to Claravest and then we will help them sell their particular share as well. Or the second thing is the sale of the entire asset, which takes place once 75% of the investors vote to sell it. So as you can see, Claravest is involved in the entire life cycle of the asset even before it gets onboarded onto our platform. So this
Hmm.
makes the investment truly hassle-free and a complete digital experience to our customers.
Sounds like a lot of work. My question is, this is not charity, right? So how do you guys make money?
Yeah, so it is quite a lot of work. But we signed up for it. So no complaints. Um, so we basically have four
Yeah, sure.
four you know what do you call it, like streams of revenue. First is the acquisition and management fee that is taken from the investor at the start of the investment period. Second is a marketing
Okay.
fee that we charge the developer when we are able to sell
Okay.
his or her property. Third is basically the performance fee. It depends on how the asset has performed. It is charged at the end of the investment period whenever the asset gets sold. Um, and fourth, which
Okay.
we are very proud of, is as we mentioned earlier, we actually started Claravest out of a personal problem. So fourth is also that Claravest ends up
Mhm.
investing in most of our properties. So any rental yield that is coming out
Interesting.
from our properties and property appreciation, that is also considered as a revenue for the main platform.
Really interesting. Okay. And
Yeah,
do you have any defined?
Yeah.
that also
Yeah, go
helps
ahead,
us,
Karan.
have a skin in the game, and it actually develops trust amongst customers. So, yeah.
No, very interesting. Do you guys have any fixed percentage that you do in every deal, or it's basis on capital availability or something like that?
So we try and we when we like get this question asked, we try and say like it's between like 5 to 10%. But like that's what we have done till
Okay.
now, and that's what we plan to do. Hopefully, would like to stick at like 5, 6, 7%, but
Hmm.
then it has gone to a 10% also.
Sure, sure. But you guys only have limited capital, right? Well, I mean,
Yeah.
I am
Yeah,
assuming if you guys scale faster, this might go below
yeah,
five also sometimes, but that's completely okay.
yeah,
At least you have some skin in the game, which
yeah.
is good.
Um,
Um,
Honestly, like I think, as
so
Karan mentioned,
okay,
like
very
this was
interesting.
made.
I did not know about the skin in the game wala thing, but that's pretty cool. Again, very interesting on the skin in the game part. Really, really like it, and I think more and more platforms should really consider that as a marketing criteria also. Because makes more people comfortable. So from the we talked about commercial real estate, we talked about residential real estate, why it makes sense. Within residential, Karan, you mentioned certain geographies have certain different kind of units or what I don't remember the word you used.
Configurations.
Maybe configurations, which is 1 BHK in Bangalore or 3 or 4 BHKs in Chennai. Are there any other things that investors should be mindful of when they're investing in fractional residential property or even full residential property for their own personal use? Anywhere.
Yeah, I mean, I think Yash, what Karan kind of mentioned are few of the very, very key things. Just understand the location. Try and
Hmm.
do like research about why do you think it's a good investment. Obviously, developer is required, especially if you're buying something under construction. And individually, you have to make sure that you are going to get your possession in a certain period of time. So that is key too. Look at the property configuration, all the stuff that Karan mentioned. Try and make sure that you are, if it's purely for investment purpose, try and make sure like what would be very easy to sell. So something like
Hmm.
make sure that there's parking. These days everyone has cars, so make sure that
Hmm.
there is a parking in your in whatever apartment you're buying. um, if you're investing in tier 2 cities, make sure that there are like generator backup for like the elevator and all the other amenities.
Hmm.
One key thing that I have seen in
Interesting.
other tier 1 nodes or tier 2 is also water supply. Sometimes there's just like no water for
Hmm.
like days and weeks. So that is also key, because if you're going to resell it, people are going to do research that either pani ka problem hai, no one is going to buy it. The
Hmm.
other
Yeah.
thing is maybe amenities. These days, you have to give amenities. Even in like Panvel region, there are
Hmm.
amenities. There are like swimming pools. People give like a jogging track and stuff like that. So make sure that those are there. And yeah, do your like talk to people who already live in that developers buildings, just for like leakage,
Hmm.
construction quality and stuff like that. um, that's basically for residential space. Obviously, if the type of asset kind of changes, your thinking view should also change. So if you're looking at like a villa or vacation villa, maybe just like and it's purely for investment purpose, you want to like give it rent it out. A pool is generally necessary. In that case, a gym is not required. No one is actually going to a
Sure.
vacation villa and working out.
Yeah. No gyms.
Lawn area. Lawn area. Maybe generally they have a servant quarter because it's second home. You want someone to be there and keep maintaining your house. And
Hmm.
then how close that villa that you have bought as a second home, which you want to rent out, is close to all the fun places or restaurants, or the key reason
Hmm.
why people actually come to that vacation spot.
Perfect. I think that's very, very helpful to an average retail investor as well. I'll give my personal examples. I've rented out a flat in Andheri East in JB Nagar,
Mm,
and it's a redeveloped society of six
Hmm.
buildings. Uh, when I was negotiating with the owner, he said parking space नहीं मिलेगा. मैंने बोला मैं गाड़ी
mm,
कहाँ लगाऊंगा आप parking space नहीं दोगे तो.
Hmm.
And that was one of my key criteria to take the
Right. Yeah.
property on rent as well. And you'll be surprised the
Yeah.
rental yield in this area is actually 5 to 6%. That person bought it for, I think, 1.5 to 2 crores. You can calculate the rental yield. But parking space was one of my key criterias, because
Mhm.
finding a parking space in Bombay is just so difficult. And if it's not
Yeah.
here near your home or your workplace, it just gets terrible. Uh,
Yeah,
very, very
absolutely.
worthwhile.
Like that's one of the things when you also are going to buy it as an investment purpose, there is usually a parking charge. And if you're just
Hmm.
thinking of an investment purpose, you might be like, okay, let's not pay this.
Yeah,
I'm not going to use it. But I mean, we strongly believe you should because it
no,
is going
absolutely
to,
agree.
yeah, help you.
Absolutely agree. Cool. There's this new regulation in the market called SM REITs, small and medium-sized REITs. A couple of the commercial property players, I think Property Share, PropShare, has
Mhm.
already come out with the draft of first SM REIT. Any plans for you guys also to get regulated in the SM REIT category?
I mean, obviously the fact that SEBI has come up with the regulation kind of builds trust that this is a really growing industry, and people are actually seeing a lot of
Hmm.
interest, a lot of money coming in, be it like from outside FDI or any Indian resident money also. So that's really great that there is a regulation. The regulations are quite clear about what should be the AUM of the platforms if they want to apply
Mm.
for the small and medium license, REIT license. um, we actually do not fall under that because we do not have that kind of AUM yet. But definitely being SEBI registered
Okay.
is the goal. We also feel that once
Mm.
the whole SEBI registration mark comes, even investors start trusting us, and that will be good for the business also. So definitely that's the goal,
Mm.
but we are just not at that AUM. So yeah, but working towards it.
Yeah, we also want to thank SEBI for not making this mandatory. So
Mm.
smaller fractional ownership platforms like us have the chance to grow and then target and apply for the SM REIT. So yeah, huge thanks to SEBI for not for making this optional.
Do you guys think that the regulation is very strict, and it will be very difficult for platforms like yourself to make any sort of money if you comply to the regulations? Because that's the feedback I have got from a couple of other commercial property players. Right.
Yeah. Yeah, I mean, definitely the additional fees kind of eats out of, either it's going to be the yield of the investor or either it's going to be from the platform. Um,
Mm.
what we are saying is,
Mm.
we don't even know how it's going to work, right? It has to be accepted by the retail investors also. So currently, we are just trying to understand that what are people's thought on it, if it will be widely accepted.
Mm.
And I'm very positive that I strongly believe that any regulation to be good, it needs bunch of iterations also. And I think the fact that it is just launched,
Mm.
maybe we'll see how people are accepting, how platforms are
It's
accepting,
gonna take
and
time.
there
Yeah.
might come, yeah, there might come iterations.
Yeah, because currently I think the units are placed at 10 lakh. Even the
Mm.
units when the REITs came out were higher, but gradually it has come down. And I strongly believe as it comes lower, more and more retail investors will jump onto it.
Mm. Okay. Um, Couple of other players are marketing fractional real estate like the next big thing. Uh, I personally think that it's healthy to have an allocation to real estate as part of your diversified portfolio. But within that allocation, also people need to be mindful of certain level of risks. Uh, when we talk about residential real estate, the biggest risk that comes into my mind is ki, okay, what if my flat is not on rent? The renter stops paying. Uh, so, rental yield, losing that rental yield is the biggest risk. there must be some other risks in this asset class, right? Which the investor should be mindful of. What are they according to you?
Yeah. So you were right. Actually, be it fractional real estate or just real estate in general, I think the risk applies to both. Even if you are purchasing a full ownership real estate or through fractional ownership, you'll always find the risk of the tenant either being there or being empty. It just becomes a little probably easier with fractional because that's sort of, our job day in, day out to keep finding tenants and, making sure that rental income's getting generated. The other risk is it's real estate, so it is going to be illiquid when compared to an equity market. So one must have a very long-term horizon getting into this asset class. So if you're thinking about, making quick money in maybe a year or a two, then I
Hmm.
don't think this is the asset class that you should focus on. So that mindset would have to be a slightly different if you're been an equity guy. What we are also saying, not a risk, but maybe we can talk about how going through a fractional ownership platform might attract certain fees and impact on your returns.
Hmm.
However, it gets compensated because things such as allowing for smaller capital to be invested in a wealthy asset class and across multiple different locations, providing you hassle-free ownership, especially when it comes to like finding tenants, the upkeeps, the resale. I think that kinds of makes it up for the fee. And in general, I think, one must do their due diligence.
Sure.
Our platforms are already doing it, but one must thoroughly do due diligence, ask questions about on the documentations that they provide, speak with people who have invested in these platforms, and make an informed decision. I think, Alt Investor, the community that you've built out there is an amazing platform where you constantly have people speaking about this, educating people. So I think, just kind of do your own due diligence as well and understand the risks that are going to be associated with this asset class.
Very interesting, guys. So I see on your current platform, you have a Hiranandani property. I think Chennai, based on nearby Chennai, right? What benefit these brands really have in working with platform like yours, and why Claravest as well? Because there are many other players in this fractional real estate space. So any thoughts on that?
Yeah, I mean, first of all, a huge thank you to Dr. Niranjan Hiranandani sir, for giving us this opportunity. Also, we have spoken to him multiple times, this year, just talking about Clara West. He was very curious about this fractional real estate in the resi space also. So we got a chance to talk to him about what we are doing, what
Hmm.
our plans are for future. um so huge thank you to him. I feel that for even like big developers and like tier one developers, fractional real estate ownership kind of becomes just a different innovative channel to sell their asset. We kind of help them increase their customer base. Initially their customer base would have been people who can afford homes 2 crore or above, 1.5 crore and above. Now their customer base has become people who can invest or who have extra money to invest around 3 lakh, 5 lakh, 7 lakh. So this also like helps
Hmm.
them increase the customer base. The other, I feel the reason might also be, it's a different style of marketing, innovative marketing also that we do, right? Our reach is
Hmm.
different. We're talking about real estate investment. We are talking about Oragadam as a region. We are using LinkedIn as the channel. The type of content that
Hmm.
we create is also different. That also like helps kind of target a different audience set. So I think that those are few things that they might be interested in, working with us.
Okay. What is new and other exciting stuff at Claravest that you guys are planning to do in the future? I mean, I know you guys are pretty young, 1.5 years maybe. but
Yeah.
as a young startup, you must be experimenting a lot, right? So what is something new that you are going to do at Claravest?
Yeah, so as like we've spoken so many times, we are currently focusing on the resi space, residential apartment space. We just also launched plotted lands on the property. We realized that
Okay.
quite a few of our investors and quite a few of people who reached out to us, just like trying to learn about Claravest, they wanted like, hey, is there like a land opportunity I can invest in, mostly NRIs. So we thought plotted
Can you
land is
explain
something which,
plotted lands?
so it's basically these lands which are generally, this is also done by a lot of tier one developers. So the land, plotted land that we have is
Okay.
within the Hiranandani Oragadam integrated township itself. What they have done is they have
Okay.
plotted a separate chunk of land within the township, and they're selling it as land so people can then construct their villas or their houses on it. So
Okay.
we have also onboarded that. And one thing that we are excited about is we've also done an exclusive partnership with Saffron Stays, the luxury property management
Okay.
company. And we are going to fractionally sell vacation villas, which will be exclusively managed by them. The model here would be different. There will only be 12 people who would be investing in one villa. Ticket size would be a little higher, and
Okay.
people will also get to enjoy the villa and get the returns out of it.
Okay. Karan, did you want to add something? Because I thought you were going to say something and then you stopped midway.
No, no, I think she covered it. I was, but I think she covered it.
Ah,
I
ठीक है.
was going to say
All right.
about plotted lands. You asked what is plotted
Uh,
lands actually. So
uh,
I was going to speak a little bit about plotted lands that typically in India, when it comes to land, there's a lot of risks associated with a clear title or encroachment. But
mm,
when you look at plotted land, since they are within a community, the issue of title clearance and encroachment goes away. So it gets completely managed. Then, or everything from your EB supply to water supplies, everything is already there. So you don't have to like sort of buy a land, find a bore well, and do all of those. So plotted
mm,
lands are becoming more popular,
mm.
especially in the south. If you go to Bangalore these days, Bangalore, you'll see a lot of land is being sold as plotted
Yeah, yeah,
lands.
of course. Um, I'm gonna ask this question. It's not in the document, but a lot of platforms are also doing real estate debt. I don't know if you guys are planning to do any real estate debt based opportunities or not. But yeah, I mean, do you think it will be
Real
relevant?
estate debt.
So currently, we are not looking at like
I
real
think our
estate debt.
first two was actually debt.
Um,
Yeah.
are you talking about like the financing portion, the developer financing part, like that?
Yeah, 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 developer
Yeah.
financing. So let's say
Yeah.
Altcraft has an
Yeah,
opportunity with Sri Merusuri Developers, which is like a plotted land development in north of Bangalore, where they are
yeah,
financing that whole operation via NCDs, corporate debt.
NCDs.
But
Yeah.
yeah, yeah.
yeah, but anyway, yeah, I don't think you guys have any plans to do that, right? So we'll skip that for now. I don't want the audience to get confused because I'm doing one podcast day after tomorrow with Ashish Khandelia, Certus Capital, which is
Okay. Yeah.
Earnnest,
Certus.
Earnnest.me is the platform,
Yes.
which is
Hmm.
into real estate debt. So we're gonna do that as well, but they are not into FRE. So yeah, I'm just trying to figure out. ठीक है तो वो ठीक है I'll go on to the last question which is retail investor has too many choices right now. Bigger platforms are also there. New age platforms like yours are also there. Why should someone choose Claravest as their investment option? Because a person only has X amount of money, right? They need to be very, very. They need to have a strong feeling as to where they should invest and what are the good points about your platform. So
Um, yeah, I mean, why Claravest? I think that, come talk to us. Understand like why we are
okay,
onboarding certain properties. We always try to give people like the entire thought process and the rationale on why we have onboarded the properties. We actually get a lot when we
Okay.
started, we honestly thought that there would be two set of problems we'll have to solve. One would be, we'll have to go ahead and convince the developer, now can you please put your property on our platform, and then go find investors. But we realized that there's no issue for the supply portion of it. We actually have a lot of developers coming to us and telling us that why don't you onboard my properties? It has a great potential. But very very few properties, like less than 1% of the properties that we actually get approached with, get actually onboarded on the platform. So understand the reason, do your due
Hmm.
diligence also. We are one of the platforms that actually also share any kind of like legal documents also, if the investor wants, before the investment we kind of do that also. We have calculators built, and we are very honest about what is a speculative portion in our investment and what is actually, like, if there is an assured rental kind of portion, what is that. um, yeah, and hopefully people
Yeah, and
are.
we have a skin in the game.
Yeah.
So, I think that helps build trust as well. As a new platform, the one thing that we always want to focus on is it's long term. So it's to build trust and credibility and improve
Hmm.
transparency. So we are pretty transparent, when it comes to speaking with our customers. And residential still has an opportunity. And I think we are one of
Hmm.
the very, very few platforms out there who are offering this. So, do look into our platform. So you'll have some exciting residential opportunities.
Perfect. Very exciting stuff, guys. I mean, listening to you, I actually had one more last question in mind. For the whatever properties you are bringing onto the platform, and if for some reason Claravest shuts down, what
Hmm.
happens to those properties? What happens to the stake of retail investors?
So the way we have structured this, right? Claravest is going to be working in that SPV either as a DP or as a promoter or the director, right?
Hmm.
So at any point of time, if you feel that, or if Claravest shuts down, or if you feel Claravest is not doing a good job in terms of managing the tenant, then the investors do have the power to actually remove us and appoint someone else.
Okay.
Even if Claravest does shut down, you are free to, either find someone else who can manage that asset. However, since we also have our money in there,
Hmm.
we would be giving everything we have to ensure that, we will be vested in this entire asset life cycle.
Thank you so much, Mananki and Karan. Learned a lot about residential real estate. Personally, I haven't invested in this asset class because my father has, and at a family level, of course, we have exposure in one or two homes. He is also of the strong opinion कि खुद का घर होना चाहिए. Frankly, I am not at that stage कि बॉम्बे में मैं खुद का घर लूँ. तो maybe fractional residential real estate will make sense for me for at least my diversified portfolio. Yeah, I haven't personally invested in residential real estate because it was very difficult for me to understand the rental yields and capital appreciation part. But this conversation has absolutely helped me do that. What I really like is those extra points that you brought around as well in terms of having a parking space or a servant quarters when you're buying a, let's say, a lawn, or the configuration is also very interesting point that I didn't know. From an investment point of view. So very, very interesting space. And residential, like you said, is the largest asset class in real estate as well. And I know, and I actually read a report that the likes of Blackstone and KKR invest in a lot of residential properties as well, not just commercial. I mean, the
Yep.
larger portion of their portfolio is actually residential in the US and the UK as well. So, of course, there is stability in the asset class, and people will not stop buying homes or staying in homes or renting homes. So this is an evergreen asset class which is backed by an actual asset. Uh, Ups and downs can happen. There is always risk. Some areas might not work, some areas might work. But as a retail investor, it's their job to figure out what works for them. They can, of course, reach out to Claravest or the alt investor community, or other people within their network who have invested in that area to know. But you should consider property as an asset class. Maybe after this conversation, I'll do that as well. Lead by example. But again, thank you so much, Mananki and Karan. Really, really appreciate it. Really enjoyed the conversation as well. And for our viewers, these two are part of the community. Please do join if you want to, ask them any questions or reach out to them directly as well via. I'm sure there must be a contact form on Claravest as well. But yeah, thank you again, guys.
Thanks, Yash, for having us. I think this was a great conversation, and thank you for letting us be part of the alt investor community, constantly learning about the space and
Thanks
even
again,
listening to
Yash.
the feedback that the people have out there. So, thank you.